CNBC's Morgan Brennan joins us now with a special guest. Morning, Morgan.
Good morning, Sarah. That's right. Well, joining me now is Joe Hinrichs. He is the CEO of CSX. Joe, great to have you on. You just posted these earnings results that Sarah laid out here. You did grow volumes 3%. How much of this was weather impact from hurricanes? How much of this is a reflection of the broader macro environment?
Yeah, sure. Thanks, Morgan. Thanks for having us. Look at the third quarter. Actually, we grew operating income 7% year over year, and we grew our EPS by 12%. So a strong quarter by our team. What we saw at the end of the quarter, we were hit by Hurricane Helene. That hurt about $15 million of revenue, and then we had a little bit lower truck revenue and some supplemental revenue. So we missed revenue versus consensus by about $60 million on a basis of $3.6 billion. Cost came in line. So that's the 2 cents of EPS miss that you're talking about. But a very strong quarter. We're happy with 12% EPS growth.
But you did trim fourth quarter guidance as well. BMO this morning writing, waiting for recovery. Quote, while management is executing well, the overall environment remains difficult and visibility into a positive inflection point in demand continues to be pushed further out. Is that the right way to see this?
Well, I characterize it this way. I mean, in this quarter, or this fourth quarter, we have a couple big headwinds from year over year. Fuel prices are down significantly, so our fuel surcharge revenue is down. Also, met coal prices have reduced. So that's about a $200 million revenue hit year over year, things we don't control. And then we've said we had about a $50 million operating income hit this fourth quarter due to Hurricanes Helene and Milton as we rebuild our network and get back up and running. So you add those together, that's some pressure in the fourth quarter. But we do see continued progress overall in demand. We've had 7 consecutive quarters now of 3% or more revenue increase, excluding fuel, in our business. So merchandise business is strong in ags and chemical. We are seeing some softening in steel and automotive. But domestic intermodal and international intermodal is growing. So it's a mixed message, but certainly we are seeing growth in volume.
So from your unique vantage point, it sounds like you still expect a soft landing.
We do. I mean, you actually just a year ago, I think, in the same quarter, and we're still seeing that. If you think about it on balance, across the markets in general, we're seeing growth. We'd love to see more industrial production. That would help us. But certainly the economy is growing, and we're seeing that in different parts of the sectors of our customer segments.
You just mentioned intermodal, which is a consumer-facing part of the business. We know we saw this big inventory build ahead of the holiday season. And ahead of this port strike we got on the East Coast earlier this month, how has the strike and the ripple effects of that impacted CSX, and how does it, I guess, set up retailers and your customers into this holiday season?
Yeah, we don't think there was a lot of pull ahead, but there certainly was some pull ahead into the eastern ports, and there was some movement to the western ports. Actually, ironically for us, if it goes to the western ports and still comes over to the East Coast where the population is, it's actually a longer haul for us because most of the things that come in to the eastern ports get trucked to New York or Philadelphia or whatever. We think that's behind us now. Our the ports are up and running, so hopefully we'll not have any issues in January when they come back together again. But the actual demand we're hearing about for the fourth quarter for the peak season is going to be up, not as up maybe as some would like, but we're still seeing some uptick in the volume.
We do have a Fed that just began cutting. Industrial activity has been largely in recession. It's been soft. Do you expect that we're going to see an inflection there as well?
Well, we hope so. We haven't seen it yet. We need to see the automotive market continue to grow. Because we're the largest mover of automotive goods, so we're actually excited to see that happen. If interest rates come down, we need to get steel and metals back going again because they've been soft this year. If we add that to a strong chemical base and forest products picking up with housing, you could see that, but we haven't seen it yet. We're hopeful it happens in 25.